Thank you very much. It's an honor for me to be here today and address such an important audience. And it's also great to be back in Korea. I was here 20 years ago. I haven't been here since. And of course, a lot has happened. And I'm very impressed by the development that you have achieved. I will talk about my favorite topic, which is the Handelsbanken business model. I will try to speak slowly, but please interrupt me if there's something you don't understand. I've been with Handelsbanken for some 30 years, and it's been a very exciting time, and the bank has developed quite a lot, even though the basic business model has been the same all the time. I will start by giving a few facts about Handelsbanken, then a little bit about our track record, and then I will describe the model more in detail. So, a few facts about Handelsbanken. Handelsbanken was founded in 1871 in Stockholm. Started out with only one branch, and subsequently grew. And in the late 1960s, the bank became the largest bank in the Nordic region. The Nordic countries, we have obviously the biggest presence in Sweden, but we have around 50 branches in Norway, Denmark, and Finland each. And then over the last 10 to 15 years, we have expanded very rapidly in the UK. So we now have about 170 branches in the UK. And the Netherlands is another market where we want to develop a full-scale universal banking presence. So far we have only 18 branches, but the aim is to increase also in the Netherlands. We have around 11,600 employees, and the number of people in Handelsbanken is actually growing because of the expansion outside of Sweden. Handelsbanken has quite a specific and different objective goal, and that is to have a return on equity, profitability that is higher than the average of the competition. This is a relative objective, obviously. While most companies, they say we want to generate a return on equity of 10%, 15% over the business cycle. When the business model was put in place, the idea was that if we perform better than the competition, then we have something to be proud of. It can be good times, it can be bad times, but if we are better than the competition, then we can be proud of that. And of course, we are lucky because we can compare ourselves to the competition. Our competitors are stock-listed banks, so we can see their numbers and we can make the comparison. That's not the case in all industry sectors, but we have that advantage. And we've also said that this objective should be achieved by having both a higher degree of cost effectiveness, lower cost than the competition, and more satisfied customers. And as you all know, banking is basically a service industry, so you can easily imagine that you can hire a lot of people to increase customer satisfaction, but then you may not have the same cost effectiveness as the competition, or you can reduce the number of staff and become more cost efficient, but then your customer satisfaction may suffer. But we want to do both. So this is a few slides showing the track record. The one and only overriding objective of Handelsbanken is to generate a higher return on equity than the competition. And this graph goes back to all the way to when the objective was put in place in the early 1970s. And as you can see, we have managed to achieve it every year for more than 40 years in a row. Some years it's been very, very tight, as you can see, but especially over the last 5-6 years we've had a distinct advantage. But every year for us is a new fight. We have to work very, very hard to make sure that we keep the distance to the competition. And that's very, very important for us. Everybody in the bank knows exactly what we're supposed to do. We have this one overriding objective. This is not the relative description. This is what has happened with the return for our shareholders through the latest financial crisis. And the shareholders have a cumulative growth in adjusted equity per share and the cumulative dividends of around 15%. And through the financial crisis, we have not recorded one single quarter with less than 12% return on equity. And looking at this, it's very difficult to see that there was a financial crisis at all. And the reason for this is that we are a very risk-avert bank. We only want to take risks that we believe we can assess in a reasonable way. So we didn't suffer big losses from some subprime exposure and large loan losses during the financial crisis, but we managed to get through the crisis in a very controlled way. And that has had a very good effect on our funding cost, which has, relative to the competition, been very favorable. This is another slide showing the total return for our shareholders compared to the competition. So this is relative once again. And as you can see, our shareholders over the last 7 years have had quite a good return of 112%, while the average here has been calculated by this database at around -50. So this includes also what the shareholders have given back in terms of issues of new shares. I said that we wanted to achieve the higher profitability than the competition through a combination of more satisfied customers and better cost effectiveness. And this shows the customer satisfaction on the private market. In the 5 home markets, we don't have the Netherlands yet because our operation is too small for that, but we have reasons to believe that we also have very high customer satisfactions in the Netherlands. We follow this very closely, and as you can see in the private individual market, we have outperformed the competition, and also in the corporate market, where the difference is especially large in the UK, where we benefit from much more satisfied customers than the competition. Cost effectiveness, you can see Handelsbanken is the blue bar, and you can see that there are a couple of competitors that have increased their cost efficiency, but we are more cost efficient than the average. So we have to work hard on that one as well. Because of the stable performance, we have a very good rating from the rating agencies. We're a AA rated bank from Moody's and Standard & Poor's, and there is no other listed bank in Europe that has a better rating than Handelsbanken. There are 2 others that have the same rating. So let me go into more detail when it comes to the Handelsbanken business model. We have a saying in Handelsbanken, which is also the title for this speech, that is that the branch is the bank. It all starts at branch level, and in Handelsbanken, branches are not distribution channels. They are rather profit center, like an independent federation of profit centers. And I will explain more in detail how that works. This puts a lot of responsibility on the branches. Each branch has the overall responsibility for customers within their geographical area of responsibility. Each branch has a defined area of responsibility and shouldn't do business outside of that area. We have something that we call the church tower, or the church spire principle, which means that you shouldn't do business outside of an area that can be overlooked from the top of the church tower. Then you know your customers well, and you can make better credit decisions, but you can also serve your customers better because they are nearby. It's easy for them to get in touch with the bank. They can walk into the branch. We don't do budgets in Handelsbanken, and I'll come back to that, but each branch makes its own business plan. The business plan is not approved by somebody else. It's sort of a working tool for the branch, and it's done in collaboration with all the members of the team. So I sometimes say that since these business plans are made and not sort of amalgamated into a total business plan, who knows what's really going on in the bank, but we have a fairly good grip on that anyway. Each branch is a profit center. It has its own profit and loss and balance sheet. So everybody in the branch is very well aware of how the branch is performing. And as I told you, Handelsbanken at group level is compared to other banks, and branches in Handelsbanken are also benchmarked against other branches, and especially branches with similar markets. It's very important to be better than the internal competition as well. This is important. If you're a branch manager in Handelsbanken, you are like a CEO of a small company. You have your geographical patch. You choose where the branch should be located. You choose how many people there should be at the branch, what skill sets they should have, and the branch decides what customers to actively approach. We don't want to be a mass market bank. We want to sort of serve the customers where we believe that our competence and skill can generate the most customer benefit, and thereby we can make money out of that. The branch also decides the pricing. That's done locally. And also, since about 10 years, salary reviews are done locally at branch level and also at department levels at head office without interference from outside. And we do this because we want to emulate the situation where you sort of run your own company. And of course, this is based on the fact that we trust that our people want to do a good job. The Handelsbanken model is based on a very positive view of sort of human nature. We do believe that people want to perform, they want to work hard. It's also very important that the decentralization does not stop at the branch manager level. So the branch managers, they can give credit decision limits to all members of the team, and thereby we get more decision-making power, which benefit our customers. And we have a saying that some 90–80% of the number of credit decisions in the bank are made at branch level. Of course, the very large decisions go all the way up to the central board of the bank, but in a typical branch, many of the credit decisions are mortgages, small businesses, and those numbers can easily be handled within the limits that they have at the branch. It becomes more and more important for customers to be able to access the branch 24 hours a day, and it should be very easy. And of course, the branches are not open 24 hours a day, so we have to complement the branches with other ways to contact the bank. We of course have internet banking, and we can see that customers today use mobile platforms much more than they did before. That's a very, very fast development, driven by smartphones and tablets. So we need to have very good applications for that, which we have. We have increased the opening hours at the physical branches to make it easier for customers to get in touch with their account manager. We also have personal service by telephone 24/7, and that's not a call center. It's people working there. They have a bank experience, so they can actually provide more than basic services, and that's a very appreciated service as well. So those are a few things that we offer our customers in terms of accessibility. And our experience is that our customers, they don't visit the physical branch that often. When they do, it can often be in sort of an emergency situation that their internet connection doesn't work, that there's something they need to get assistance with. And if we can be there and give them very rapid, good service, they will appreciate that. They do all the normal transactions over internet and smartphones and tablets, but when they really want to get to the branch or the telephone service, they usually have a problem. Of course, we also book personal meetings to go through their economic situation and provide advice. But it's very important, and we call it a moment of truth. When the customer approaches us in the branch, we have to perform, because it may only happen once or twice a year, and then we have to be at our best. When internet banking arrived, many banks started to close down their branches because they they said in the future banks will not need to have bank branches. Everything will be conducted by over the internet and banking platforms on the internet. And we had several of our Swedish competitors that started to close down branches. We instead said, let's use the internet and make internet banking local. So let every branch have their own website. So it should be similar to when you walk into a physical branch. On the internet, you contact your bank. You should get this personalized feeling. This is one of the branches that we have in the UK. I was running the UK for 5 years, and this is the Southampton team at the time. And it's very easy to get in touch with them. Their mobile phone numbers are listed on the website, and sometimes they also give a little description about themselves, about their hobbies and interests, to give you the sort of personal flavor. And we really want to be accessible, and I think this shows that we are there to support the customers. However, as I said, each branch has the full customer responsibility, also for large companies and also for ultra-high net worth individuals. And of course, some of these companies are very, very demanding. Some of these clients are very demanding. So then the branch needs to make use of all the expertise and support that we have at the regional level or at the central department. And the more demanding clients you have, the more help you need. So it's very important that the branches make use of all the expertise that we have. We are a universal bank. We can handle life insurance. We can handle mutual funds. We can handle investment banking, international cash management, and lots of different services. We call this one the arrow, and we have a saying in Handelsbanken that it's the branches that interact with the customers, and then the rest of us, way back in the arrow, we are there to support the branches in their interaction with the customers. As you now understand, we are a very decentralized organization, but there are a few things that keep it all together. The first is that we have a very strong corporate culture. The business model is deeply rooted in everybody in Handelsbanken. We've had the same business model for over 40 years, so there have been no reorganizations or drastic changes in strategic direction. Which makes it more easy for people to understand this is the way we operate and this is the way we do things. Also, it's very important for us to have a common credit policy. It may sound obvious, but it's important for us that we look upon credit risk the same way in Norway, the United States, and in the UK as in Sweden. So the credit policy is very, very important, and especially when we enter into new markets and we export a business model to big markets like the UK, it's very important that the people we take on board get a deep understanding of the credit appetite. And that takes some time because in Handelsbanken we cannot offer our employees a sheet of paper saying exactly what type of deals we are willing to do, but it comes by learning by doing, and after a couple of years you have a very good understanding of how we look upon credit risk. So that's an important learning process. We also have a very well-established financial control system. When the numbers come out, you can't debate them. They are there. And as I said before, we have also internal benchmarking, which is really important. Everybody wants to be better than average. And by definition, everybody cannot be better than average. So there's a constant push to improve things. And I would say that benchmarking is both a friendly competition and it can also be a learning exercise that you can learn from others. Why are they better in that particular area and why are we lagging behind in that area? So benchmarking is very, very useful. When the overall objective of Handelsbanken having a higher return on equity than the competition was put in place, the sort of founder of the model, he said that I want our staff to share the profits if they can generate this extra return for the shareholders. So a system was put in place that we call the octagon, and the idea was that if we are more successful than the competition, 1/3 of the extra profits should be set aside into a foundation that we call the octagon, and the money is then paid out, but it's paid out upon retirement, so it's a deferred system. So you can have to wait for quite a long time to get the money. And the money is invested primarily in Handelsbanken shares. So that means that if there is an allocation, the money is invested in Handelsbanken shares, the staff members, they become very interested in how the Handelsbanken is performing, both when it comes to the profitability, but also when they indirectly become shareholders. As I said, every year since the model was put in place, we have managed to achieve the overall objective of generating a higher return on equity than the competition. Some years there was no allocation to Octagon because we have rules saying that if dividend to shareholders is being reduced, there will be no payout to the staff members or to the Octagon. But the Handelsbanken share has performed very well, and if you've been in the system for a very long time, you're now entitled to between 1 and 1.5 million euros, the equivalent to that. The interesting thing is that that's a lot of money, but only 8% of that is actually allocations. The rest is increase in the value of the shares that the Octagon holds. So it's not that the shareholders have paid out 100%. They have only paid out 8% or given away 8% of that. The rest is increase in value. And today the Octagon owns about 10% of the bank. There is another shareholder, an investment company in Sweden that holds a similar size, but from time to time the Octagon is the largest shareholder of Handelsbanken and has 2 seats on the board. Not because there should be employee representation, but because the Octagon owns 10% of the bank. One of my branch managers in the UK, when I was running the UK, he said that this business model is a bit like a franchise. The difference is that I don't, as a branch manager, I don't put in any money. The bank puts in the money, but I operate in a very free way, like would be the case in a franchise. And I think that there is some merit to that statement. Of course, there are differences, but a bit similar. In Handelsbanken, we don't do budgets. Some of our customers, they make fun of us because they say, now you're asking me as a corporate customer to show you my budget, but you don't do budgets yourself. And of course, we know that we really want to see the budgets that our corporate customers do, but we know that that's not the truth. That's just a sophisticated guess about the future. And as you may realize by now, the Handelsbanken business model is not compatible with budgeting because it all starts at branch level. There is no sort of top-down saying next year everybody has to increase their business volumes by 10% or so. The conditions for branches are very different in different locations, and the branches, they make their own business plans. And if they don't achieve, if they set their own targets in the business plans, we don't care whether they achieve them or not. What we care about is their relative performance compared to other branches. And from our point of view, we think that the budget is not only unnecessary, it can be very dangerous as well, especially if you set targets and you say to your employees that if you achieve your targets, you will get a bonus. So the budget becomes a target, and if you achieve it, you get a bonus, because that can create all sorts of strange behaviors by staff members. And of course, if you're, for instance, an investment advisor to a private client, and the client sitting on the opposite side of the desk, the client knows that if you buy a lot of shares or mutual funds, he or she will get a bonus. You may not feel that you get the best possible advice. So it's very important for us that we look to what's best for the customer and not what's best for myself when I get a bonus. And we also know that budgets are often a result of a sort of negotiation between the boss and those who are supposed to perform. And I've met several people in banking who said, well, you know, the budget negotiation is really, really tough. Once I met the CEO of a large European bank, and he said, well, you know, I really don't like the budgeting process because first I have to negotiate with my organization, and I say you have to perform very, very high like this. And then when that's done, I go to my board and said, you know, it's very difficult, so I can't perform very well this year. So he had 2 rounds of negotiations, one with his own organization and then with the board of directors of the bank. And of course, we know that the world changes all the time. So what was a good projection, a good estimate, a good objective last week may not be accurate today when a big accident has happened, or there is a world crisis, or the oil price has doubled, or whatever. The world changes all the time, so sticking to targets that you set in a budget 6 months ago can be very dangerous. And of course, if times are booming and you easily achieve your targets set in a budget, you're very proud, but really if everybody else did much better, you shouldn't be too proud of that because it was the circumstances that changed. So instead of budgeting, as I've said, we have a business model that is based on benchmarking, and it's really benchmarking at 3 levels. First, at the Handelsbanken Group level, where we compare our results to these other stock-listed banks in our home markets. And then we have something internally called regional banks. We group branches. In Sweden, we have grouped them into 6 regions. So the regions are benchmarked against each other, and then the branches are benchmarked against each other as well. And also, I come back to that, it's a great advantage to have a deeply rooted corporate culture that has been in place for many, many years. I've listened to so many presentations by banks saying that, you know, now we are going in this direction. Our new CEO has decided that we should do this. And then a couple of years later, they might get a new CEO who says, now we're going in that direction, and everybody knows exactly that we're going in that direction. It's very hard for people to change too often. It's a deeply rooted corporate culture is a great advantage. There are a couple of other Swedish companies that have deeply rooted corporate cultures that they've had for many years. IKEA is one example, and also H&M, the clothing retailer, they also have a very stable business model that they've had for a long time. We have internal support functions, and they have to sell their services to the branches. When the new model was introduced, we have 100 people at a central marketing department. And when the model was put in place, all these kind of departments had to motivate their existence by getting a demand from branches who were supposed to pay for them. As it happened, nobody wanted to pay for the central marketing department, so it more or less disappeared. Because in Handelsbanken, marketing is supposed to be done by the branches, and we don't do central advertising because we believe that's a waste of money. Branches can do local advertising and support a local community, but doing it at a national level, we don't think is money well spent. And in the end, the customer has to pay for it, so we don't do that. So the internal pricing for support function is an important part of the model. Instead of budgeting, we all the time discuss how we can improve, and it's more sort of gradual improvements than making big organizational changes or big changes of another nature. The octagon, as I've explained, focuses everybody's attention on what is important. This one overriding objective, have a high return on equity than the competition. It's very easy. You shouldn't have too many objectives in a company because then you sort of blur the picture, and we have only one. So you can wake people up in the middle of the night and everybody knows exactly why we are here, what we are supposed to do. I've explained that we don't have bonuses for people in the branch network. At top management, we don't have bonuses. We have a few people in our investment banking division that have bonuses, but the number has been reduced in recent years. And we believe that we want to trust our people, and if you have a bonus system, they may start to act in a way that benefits their own wallet rather than the customer and the bank. So trust is a very important part of the model, and as I said before, the Handelsbanken business model is really based on a very positive view of the human nature, that people want to perform, and we just want to give them the tools and the possibilities to perform, and then they usually do it. Handelsbanken has a presence in 24 countries. 6 of those, as I have explained, is markets where we export the full business model and want to build a universal banking presence with a large retail network of branches covering as much possible of the country, and also specialist functions supporting the branches. The other 18 countries are there to support the home market business, primarily corporate business in overseas markets, and we believe that by being able to follow our customers out into the world, we can create closer relationships and provide greater value added for our customers. Finally, I will comment on how we see the Handelsbanken growth model setting up new branches in Sweden. We set up a few new branches in Sweden, but not that many, but primarily in our newer home markets, the Nordic countries, the UK and the Netherlands. This is statistics now that I'm going to show you from the UK. And the blue line is revenue and the red line is expenses. And this is based on the actual history of our branches in the UK. On average, it takes about close to 2 years before new branches break even, when the blue line surpasses the red line. And then our historical data shows that revenues tend to increase much faster than expenses. At this stage, you can see that 60% of our branches were less than 4 years old, and these are the branches that were started 10 years ago, 9 years ago, 8 years ago, and so forth. And by the branch network maturing, moving this direction, you can see you get into an area where the gap between revenues and expenses widens, and that of course increases the profits. So that's very simple. That's the way we want to grow our profits. So that was the end of my presentation, and I will be very happy to answer any questions that you might have. Thank you.